no one's coming to save you. You know, you've got to take responsibility. But if you do, then you can build the right people around you because they'll understand that type of person.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to today's show on Wealth Strategy Secrets. Our next guest is Garrett Gunderson, who is an entrepreneur, New York Times best-selling author, and even a comedian in the wealth strategy space. We take a deep dive into investor psychology and dispel many of the top money myths most people struggle with. Garrett also unpacks his own wealth strategy that ensures he is living a life of abundance, fulfillment, and impact. And finally, Garrett will unveil his latest book, Money Unmasked, that taps into your money persona to go beyond the constraints of scarcity to accelerate results, reduce risk, have more energy, and to start making better financial decisions. Garrett, welcome to the show.
What's up, Dave? Good to be on. Appreciate it.
Yeah, no, really awesome to have you on, Garrett. I love connecting with like-minded people, and I really so much support your mission and really trying to break down all of these concepts that I think, we were all taught, right? We were taught by conventional wisdom. We were taught by schools, our peers, our parents, all these things. And you've really just kind of, pulled back the curtain on, what's really happening in the financial industry. And you have such a unique background as well, being a financial advisor yourself, and then kind of moving into some of these more advanced strategies. So really appreciate your time today. And I know the audience is going to really jump into this, but for those who aren't familiar with your background, why don't we start things there and just, tell us about your journey.
June of 1998, I got life insurance licensed. And shortly after, I got my Series 6 and 63. And in 98 and 1999, I mainly sold mutual funds and a little bit of variable whole life insurance. I thought the stock market was where it was because it's the 90s. The previous 8 years were like unprecedented. I was young and naive at 19 years old. And then I had my wake-up call in the year 2000 because most of my clients were like my family, like my grandparents, my parents, my friends' parents, and they all thought I was super smart because I had nothing to do with the market going up. But when the market went down, they're like, what do we do? And I hated what the firms were telling me. Tell them the market's on sale. I'm like, well, that's bad news for the people who already bought, not good news. They're like, tell them we're in it for the long haul. I'm like, when does the long haul end? When they die? They're like, dollar cost average. I'm like, I don't know anyone that's looking to be average. And so fortunately, I had this mentor. And he managed $5 billion in municipal bond funds. And he helped me get everybody out of the market between March and May of 2000, therefore not losing for that next 2.5 years that there was double-digit losses. So there was 3 years in a row of losses. And that's where I really decided to focus on what was guaranteed in finance. Like, we're not even allowed to say that word. But what's guaranteed in finance is if you could save tax, that's a guaranteed return. If you could save interest, that's a guaranteed return. If you could save non-performing fees and commissions, that's a guaranteed return. Or if you can remove duplicate coverages or an improper structure with insurance, again, another guaranteed return. So I became like obsessive about efficiency and helping people keep more of what they make and focusing more on cash flow. But when I was really young, and I was in my 19 years old, 20, 21, 22, I could use being young to speak to people who normally wouldn't meet with someone. So I just went and I flew somewhere every single month. It was 26 straight months and interviewed the brightest financial minds I could schedule with. I remember, being 20 years old, never driving in New York and renting a car and trying to navigate that chaos, but like learning so much because I didn't know. And I'd had this situation where the market went down and I didn't want to face my clients again and say, oh, I'm sorry, you're in it for the long haul. And so I just had this red memo pad. I used to just take notes and ask, like I was curious. And that helped me to see like the rules that the middle class and the poor were playing were very different rules than what the ultra wealthy were playing, because I got to see what a family office was. I walked into this boardroom they were talking about a $400 million strategy, and there were attorneys questioning how the taxation of it would be, and the ownership of it. There were investment advisors and analysts saying, what are the risks that are in this? And the client wasn't even in the room. And so I turned to the guy that was presenting at the end. I said, well, what is this? He goes, it's a family office, but it's low tier, maybe $30, $50 million. You could work with these guys. I'm like, I came from a coal mining town. 30 to 50, there was nobody worth $30 million or $50 million. There's no one that could have worked for this firm. So I went on this really ambitious yet naive kind of process of being like, I need to create this for the average person, like a comprehensive, cohesive, communicating team. And I realized that's really hard to do because the very best people get bought out or gobbled up by these families that have a team that works just for them. Like if someone's worth $300 million or more, they might have a financial team that is only employed by that family and no one else. And there's these entire networks of family office events where they all get together and they're examining investments and have people presenting investments that aren't available to the public. And so it's like, oh, this is a whole different world that I didn't even know anything about. And it really opened up my eyes and, changed my trajectory.
Yeah, so many parallels to my story as well, Garrett. It was back in 2000 when I just got so fed up with the market, and the tech bubble was bursting at the time. And I just hated that feeling of having no control. You wake up every day and there's to be something else in the news, and it's just all, it's a sea of red and you have absolutely no control, right?
Right.
And then the other thing that, I really respect about the work that you're doing in your book, I've got a copy of your book right here. We'll reference this for folks, Killing Sacred Cows. But I love how you really get into investor psychology and really thinking about what is this all about anyway? Right? There are tactics, there's strategies that we can employ. We can follow the ultra wealthy. But let's kind of jump into investor psychology a little bit, because I think it's kind of so fascinating, some of the things that you've uncovered here. And, why don't we start with abundance versus scarcity mindset?
Yeah, that's the first chapter of that book. And the title of the book's called The Finite, or that chapter is The Finite Pie. And I remember, as you can see by my hair, at one time I wanted to be a rock star, right? Like I loved music and I played guitar. And my wife bought me Rolling Stone as like a subscription. And the very first magazine I opened up, it was a picture of this massive guy. It was a cartoon. He was bigger than all the buildings, eating pie. And there's little crumbles coming down, the little people down below. And the title was The Finite Pie. And it was a belief that there's a win-lose zero-sum game, that one person having wealth means another person cannot have wealth. And that is this foundational philosophy of scarcity. And they quoted people in the article like Thomas Malthus, who was an economist, that was like, we're going to run out of food. That was like 300-400 years ago. And I just kept thinking, I'm like, animals have babies, and, plants have seeds. And yeah, maybe there is a place where there's too much, but ultimately they were ignoring innovation, ingenuity, exchange. And my belief was, in abundance, the wealthier someone is, it means the more value they created. And the more value they created, the more other people have actually been able to receive that value. And the more exchange we have through serving others, solving problems, and delivering value, the more wealth is created. And I think we have so much evidence of abundance because there was a time where 59% of the planet just a few hundred years ago was like in poverty. And now it's like 9% is in real poverty that still exists, but it's drastically reduced. And even if we look at people that were extraordinarily wealthy hundreds of years ago, like I went to the Palace of Versailles a few years ago, and it's like a big place, but it didn't have indoor plumbing when the kings were there. It didn't have, they couldn't have just whatever food they wanted. It was limited to just what was there. They couldn't just get anywhere in the world anytime soon. If they wanted music, they had to bring in a band. Like now, someone who's middle class has access to even more conveniences through innovation and technology and value. And so this notion of, if we think it's all about competition and what we could take versus what we could create, that zero-sum game mindset harms us, not helps us. And if we don't conquer the scarcity mentality, no luck or saving or discipline or rate of return or financial person will save someone, because scarcity is the greatest destroyer of wealth. And it's a belief system that governs our behaviors. And those behaviors are very limited and they're very isolated. I believe in abundance. It's co-creation and collaboration and value creation that are king. And if we can really embrace that, then we can be more expansive by solving bigger problems, serving more people, or more deeply impacting the people we serve. And so that's the foundation of everything when it comes to finance, is understanding that. And if you don't understand that, then you're probably going to get persuaded to do things that don't make logical sense, but someone convinces you of because you believe a faulty premise.
Yeah, it's so spot on. And in our holistic wealth strategy, that's actually phase one as well. It's all about your mindset and having that abundance mindset, getting rid of those limiting beliefs, right? So you can conquer things. Because like you say, I mean, everyone's going to come back. You could have the greatest strategies that you share with people, but they're going to say, well, my financial planner said it was too risky, right? My family and those around me say that, hey, this isn't for me, it's too risky. So you have to have that abundance mindset, like you said, to be able to, create value, and just think about the possibilities. And then the second piece of that, I also find, really fascinating about your journey as well, is it's this concept of never ending question asking, right? And curiosity, right? That you have in life. And that's part of having a growth mindset, right? Always creating a future that's bigger than your past and everything. So talk to us a little bit more about, your path on curiosity. Was that really the passion, or did you have a particular aha moment that, really inspired you on this journey?
My curiosity candidly came from a root of not feeling like I was smart enough early on. Look, when I was a kid, I was in, it was like kindergarten. I'd made this little art project, which was a house out of a milk carton. And to get it back, you had to memorize your address. I never did because I just forgot to do it. And then finally, the last day, I gave it a half-assed effort. And so everybody in the class got it back but me, and mine got thrown away. So from the time I was young, I was like, man, I'm stupid. So I did all I could to prove I wasn't stupid. Great grades, a lot of study, a lot of research. It wasn't naturally what I would have done, but I had this ambition to prove that I wasn't dumb and prove that I wasn't stupid, which led me to be curious. So it served me to a large degree till it didn't, till I wouldn't speak up, till I wouldn't ask every question because I didn't want to appear as dumb, right, like in a group. But fortunately, I did work and kind of got over that. But that was my initial thing. My curiosity was, I wanted to learn for myself so I could get out of my small coal mining town and move to a big city and be seen as successful. And my definition in my rudimentary mind at the time was success was being a multimillionaire. That's what I thought success was, and maybe when I was 15, it was probably being a millionaire. And then I remember getting there at 27 and being like, it didn't feel that much different. And I wasn't necessarily a whole lot happier. I do think money does directly relate to our happiness when we handle the basics. But once we get past that, if we're not doing things that we enjoy and we're not designing a life that we love and we don't feel fulfilled in other areas of our life, money as a solo artist can be very misleading, where if we're just trying to build net worth at the expense of our family, our quality of life, our travel, our hobbies, we might check every box society told us mattered and not feel whole. Feel actually quite hollow and feel empty and wonder why more people aren't like banging down our door saying, you're so amazing. Because I think that a lot of times our relationship to money is merely a reflection of the relationship we have with ourselves. And anything we haven't accepted in ourselves that we expect money to fix, unfortunately, isn't strong enough to fix those things that are more emotionally in nature and more wounds that a lot of people have. So what's great is when you can have a whole lot of money, a whole lot of purpose, and a high quality of life instead of a whole lot of money, no purpose, and be exhausted all the time, right? So it's not that you have to do away with money to be happy. You can have money and be happy. It's actually easier in a lot of cases. It's just that unfortunately people do things they hate to live a life that they love 30 years from today when they're so-called retired. But what happens if we create a life we don't want to retire from? What happens when we become financially independent early and now we can swing for the fences in our purpose and our life design versus just being in the grind?
That is just so spot on, Garrett. And I think so many people struggle with that. I think people don't really spend enough time working in it, especially today, right? We live in such a reactionary kind of environment. You've got so many different things coming out, at us at the same time. But if you don't spend time to kind of figure that out and get your mindset right, you're really going to plateau, or even worse, your world starts getting smaller without having that right, vision and stuff for yourself. Garrett, have you been able to, there's so many different, again, strategies and tactics that, you uncovered in your book and everything. But one of the, successful habits I've seen with family offices and ultra high net worth as well is that they've created one kind of overarching, framework or overall wealth strategy. So have you defined such a wealth strategy for yourself personally?
Yeah, I have a wealth framework for sure, and that framework has depth in each piece of the framework, but it begins with simplicity of I'm just always like, okay, so financial independence is the first step. Financial freedom is the permanent step. So there's a difference between the two. Financial independence is when we have enough recurring revenue from our assets to cover our expenses. So whether we show up and do work the next day, we are taken care of. Now, we still have to maintain that by monitoring and managing it. But ultimately, there's 5 levers that help us create financial independence. And then financial freedom, it's a perspective or a state of being where money is no longer the primary reason or excuse we would do or not do something. It's a consideration. It's just not the consideration. And when we can come from that place, we can make decisions that are based first and foremost on value, second on the economic impact or cost, and then third on the price. Most people who are not financially free think about the price and price alone, and therefore they spend a lot of time trying to save money, but we don't shrink our way to wealth. It's an expansive game. So if I put value first, economic cost second, which might be, hey, maybe I pay a lot more for my financial team, but they provide so much more value than another financial team that would be cheap, right? So sometimes high price can be low cost because you're tapping into the best people, the best resources, and then that values your overall feeling of satisfaction and enjoyment. So I want to be financially free at all times, and there's a framework for that, which is simply how I start my day every day. I start my day with some meditation, with a sauna and cold plunge when I'm home, with some stretching, and then gratitude journal and intent for the day. And so I'm living by design on a daily basis. That's part of how I keep that financial freedom at the forefront, is those habits and rituals. When it comes to financial independence, well, then it's about these 5 levers. The first one being plug financial leaks. So I'm always looking at efficiency. Can I pay less to the IRS, to interest, to investment costs, or to insurance costs? Is there a way to do that more efficiently? Number 2, engineering the wealth. What is the amount of money that has to come in every month to cover my basic lifestyle, and reverse engineering to get there? That is first on the foundational pieces, so no money's leaking through like the first step. Second, the sustainability, because we're looking at mitigating risk in a long-term way, which could be everything from asset protection to education. And then the third piece is investor DNA. I want to invest in things that are aligned with my values, my competencies, my drivers, and I focus instead of diversify. Focus on creating cash flow, which is that third step, which is accelerating investment income. I look at all my assets and say, can I create cash flow? And I look at assets differently than most people. I don't look at assets as things I have no control over. I look at them as either businesses, real estate, or intellectual property. And I'm saying, which of those am I going to develop most of my accelerated wealth with? And then the fourth step is I'm always looking to scale that revenue, because if I have control over the outcome of the income with those assets, I can actually make tweaks by marketing, hiring, developing, eliminating, whatever it is, and that can grow a lot faster than a blue chip stock could ever grow. And then the fifth thing is to make it count. I treat myself as my greatest asset. I'm always investing in myself, and I'm always asking what's the highest quality of life along the way, so I'm not wanting to retire from my life. So plug financial leaks, engineer wealth, accelerate investment income, strategically grow revenue or scale revenue, and then fifth is make it count. That's the framework of wealth for me, because it creates that cash flow, and then I have choice where I could swing for the fences in everything that I do. Now, I have different pieces of that framework where I capture the savings. I like to put it in overfunded whole life cash value insurance as a savings account because I think that's better than a savings account that's taxable, that doesn't have a death benefit with it, that isn't protected from liability, where a lot of people keep those money in, bonds, which right now interest rates have been going up, lowering those values. They don't have a death benefit, so they got to buy term insurance. I don't have to buy that. So I use this cash value as a way to capitalize when economies are chaotic. When the market's down, my cash value stays strong. I could then buy when the market's down, whether that's real estate, whether it's acquiring a business, or whether it's developing intellectual property, because people pay attention to me more in down markets with my financial advice. So my books tend to sell more during that time. My courses tend to sell more because when people are lulled to sleep because they've had a strong market for no reason other than people aren't, they're just putting money in, or maybe it's even fabricated through hedge funds or whatever it might be, they're not paying attention. But when COVID hits, or when the market starts to decrease, and when all of a sudden the money they're putting in isn't getting them what they want, they start going, hey, what can I do? So I'm always looking for having liquidity that I can then take an opportunity where other people don't have liquidity and actually profit from day one. I call that making money on the buy versus hoping it's going to work out 30 years from today. Look, the numbers are in. 95% of people in America are not financially independent at age 65. 95%. So that's including if they have Social Security. That's including if they had a pension, or if they had a retirement plan like a 401k or an IRA. They can't stop working and cover their basic expenses. That's why I want this framework to cover that within 10 years, so that now, rather than try to save 10% of my income, I can save 100% in building new assets. And that's why I have 9 books instead of 1, because I build more of those assets, because that's an investment for me that I now can invest fully versus trying to save 10% of my income and then the other 90% pays bills. My cash flow is paying the bills and frees me up. So that's part of it. I mean, there's more to it, but that's the basics.
Yeah, no, that's really great. And it's actually one of the questions I love to ask guests, right? Is what is your wealth strategy? And most people all think about it in terms very one-dimensionally. They say, we just invest in real estate. This is what we're doing. This is how we're building growth. But I think the way you articulated that is really this 360-degree view that encompasses that, that freedom portion, right? Which is essentially what we're all looking for. Right. And if you can realize that earlier in your life, rather than waiting till you're 65 to achieve it, I mean, wow, life can be so much more exciting. And to that point, you talked about the difference between financial independence, financial freedom. And this is something I've found interesting, is that, there's this FIRE community out there, a lot of people who want to, build passive income in the community, which is great. Their income will exceed their expenses. But I find in some cases, people are actually doing that to a fault, where, they're keeping their expenses so low, right, that they're not growing, right? They have achieved that financial independence, but they're not really growing.
Right. And there's 3 ways we can live within our means. A lot of people in the FIRE, they're like, live within your means, live within your means. But the problem is they're only thinking about the first way, cutting expenses. But here's the thing, there's 4 types of expenses. The one that they're completely spot on with is get rid of your destructive expenses, overconsumption, borrowing to buy something that you can't afford, stuff that you don't really value. There's a lot of people that are just mindlessly letting money leave. The second, though, is lifestyle expenses. They're minimizing some of the best lifestyle expenses just in the name of not having to work. And there's just certain things like that people love. I call it mindful cash management. It's what we want to do. And we want to also look and say, what's your living wealthy account? Like, what if you had some money that you could just splurge because maybe you like to buy things that other people think are expensive? Maybe this jacket was probably too much for most people, or maybe a certain restaurant. Maybe you like Michelin rated restaurants, or, maybe you like to go to the Tour de France, or like there's all these things, but people go, oh, I don't need that. Well, you might not need it, but you might want it. And it's okay to want it. You just have to manage it and pay cash for those things. But if you get to a miserly mindset, you're never going to get there. The third thing is protective expenses. Protective expenses are your asset protection, your estate planning, your corporate structure, your education, and your liquidity. People that are often middle class and don't know what the wealthy know never take care of these protective expenses, and they have to start over more than once through their lifetime. And it's simply because they didn't understand. But the fourth type of expense is what this movement's missing that you mentioned, the FIRE movement. It's productive expenses. You put in $1, more than $1 comes back. I don't budget those expenses. I go, as long as I can manage it and handle it, let's keep putting money in it because it's productive. And so if we get in a mindset that all expenses are bad and we should eliminate them, we eliminate our production. And reduction can help you to get on track, but production accelerates you when you're on track. And unfortunately, whether it's Susie Orman, Dave Ramsey, or the FIRE movement, it gets people to focus more on cutting back than creating. And the game is a game of value creation when it's true wealth. And the more people that you can impact, or the more deeply you can impact those people, the more wealth there is, because money is a byproduct of value. So the more value you create, the more money you're going to have. So that's kind of the two other ways to live within your means, is to be more efficient, like we said, plugging either those 4 leaks, IRS, interest, investments, or insurance. And then the third one relates to the fourth expense, expand your means. Why not expand your means? I get that far too often people think materialism will make them happy and they're going to be disappointed. So I think that this movement is right on that. But why in the world would you retire from value creation? What kind of life is it to be 50 years old and have no purpose other than to get up and minimize your expenses? Or is that truly going to bring you happiness? I get it. We could give a bird finger to the consumeristic world of corporations trying to get us to overconsume, but that doesn't mean we should stop serving one another and stop living our purpose. That's what I'm most concerned about in that movement.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Yeah, so such good points there. And I mean, I can relate to so many of them. And look, I mean, I was raised in a middle-class family as well, right? And I was always taught, there's starving children in Africa. I mean, turning off the lights in every room, right?
I still can't help but turn off the lights in every room. Or get after my kids if they didn't drink the whole drink. Like, it's still programmed in me even after all this work. It's like it's like an inheritance that I got.
Yeah, exactly. It takes a lot of work. And one of the things that I've actually done, so, speaking to, your cold plunge and sauna, like I actually created a goal for myself this year to say how much, can I spend $25,000 on my health with, extracurricular things? So purchasing a cold plunge for $6,000. Some people are thought, you're crazy. You're buying a tub just like that. But yeah, I mean, the health benefits of that alone are just, massive, right? I haven't had a sick day and I can't even remember when, right? So reprogramming your mind, I think is so important for some of these things.
Yeah. I look at, again, I said, you are your best investment. So health is part of that investment. Yeah. And people that don't take care of their health will later on have to have a much higher price to keep their health. And it's a price I don't want to pay. I went to my grandma's funeral earlier this year, and just a lot of my family members are just unhealthy, surgeries, not doing well. And I'm like, man, like I was extra motivated. And it's really cool because my 18-year-old is watching that. So we work out 4 days a week together. He does the cold plunge. He watches Huberman and does only the exact amount he's told to
Nice.
do. He does the sauna. He hangs from a bar to get his mobility, and he gets out and gets some vitamin D every day. Like, so it's pretty cool to watch him taking care of himself. But that began by me valuing myself and taking care of myself and having these tools there. And so I get some people might be in survival, but part of the reason we get caught in survival is from faulty philosophies where we think hard work solves everything, but hard work with the wrong philosophy still leads to bankruptcy or frustration. So understanding the frameworks, like you're asking, can liberate us to get past this kind of situation where we're making effort but not feeling we're making progress. And I get it. Like sometimes people don't have the financial wherewithal today to do what we're talking about. But if you could just look at the things like I'm talking about first thing in the morning, you can write, gratitude, and that can start opening things up. You can meditate. That doesn't cost anything. You can do the things to invest in yourself without even having to write a check or transfer some money. I don't think people write checks anymore. I I don't think that's actually a thing these days. Venmo, whatever it is, whatever these kids are doing. So basically, we can invest in ourselves regardless of our financial circumstance. By watching this, by reading something, and by the way, I don't know if you know, I have a new book that just came out too. This is my
very nice
seminal work.
Money
I think, Money Unmasked. It's because this is really about what are the subconscious things. What are the relationship to money that we have is just our relationship we have with ourselves. And if we expect money to fix our problems, but we haven't looked in ourselves, it's not going to help like we wanted it to, and we'll be upset. We'll check the boxes, but not feel the fulfillment. And so there's 4 money personas that people have. And once they understand their money persona, it's more predictable of understanding what's happening. I kind of think of it as like not knowing your money persona is like driving around at night with no lights on. You're going to hit a pothole. You might go off the road. This kind of illuminates it. So you're like, oh, now I can see and I can make better choices. That's what happens when we know our money persona.
Yeah, for sure. That and that probably ties to your investor DNA that you talked about earlier, right?
Totally.
Really understanding yourself, and then, not only the activities and the purpose that you want to do, but also investing in those things that, align to that DNA, that make you happy. They come naturally to you. I think one of the things I learned also, reason I didn't really like the equities markets is, I don't really have that trader mentality. I'm a people person, right? So I like, I want to be aligned with people that I can make bets on, people I can make assessments on, and are they going to win the game and do that versus, just putting my money in some kind of machine and then you hope it is going to turn something.
I can't imagine sitting there and options trading is tough because it's competitive and it's cyclical, but you're just sitting there clicking a mouse versus talking to a person, like you said. And by the way, options trading is win-lose. It's one person wins, the other person loses. So I'm just not, whether it's options trading or just trading stocks, like I'd rather connect with people. And that really is disconnected because people start seeing it as company or numbers on a piece of paper, and it's not as much about communication and value. And so anything that's a greater fool theory, one person wins, another person loses, I don't care whether it can make money, I'm out. Like you bought my book, Killing Sacred Cows. I made money from you buying that. I know what's in the book, so I didn't need to keep the book. You could be wealthier by reading it and understanding the book. I could be wealthier because you bought it. We both could be better off because of that, because we shared with one another. And you valued the book more than you valued the $20. I valued the $20 more than I valued the book. Both parties ended up wealthier in that situation. The only time that doesn't happen is when there's deceit and deception and over salesmanship. And that, I know that gets people jaded, right? But someone that's not wealthy could see profit as evidence of deceit. But if someone's wealthy with ethics, which is actually more often than not, that wealth is a byproduct of value creation. So profit is evidence of value. But if the mindset is profit is evidence of deception, people will propel and they'll make sure wealth doesn't come to them. They don't want to be bad people. So they want money, but they feel like it's evil. So you could see all of those myths really harm people where they're doing their best, but they're pushing the gas and the brake at the same time and wondering why they're not getting better gas mileage and why they're not getting further and why are these other people passing them. It's our framework. It's our mindset. It's our belief system, and hard work, again, in the wrong belief system is not going to equal good results.
Yeah, for sure. And I think that's really at the heart of capitalism, right? And I always find it fascinating that we have so many international entrepreneurs in this country, right? Because they've come where they haven't had the complacency, right, that we do of all of these things that are right at our fingertip. And they come to this country and they have so much gratitude. There's so much opportunity in front of them. And they have that abundance mindset to go and create the value, which is going to be bigger for communities, having more impact, and also all those types of things. So I think a lot of Americans sadly look at it, like you say, with that opposite lens, right, which is really self-defeating.
Yeah, it's something to be said about someone that walks away from everything and has nothing to lose. They can be a lot more resourceful versus someone that's born on second base and thinks they've hit a double. They might not have as much gratitude or might not be as resourceful or feel like they have too much to lose. And see, in this book, Money Unmasked, I talk about these two factions. There's playing not to lose, and that's people holding on to what they've got and just hoping that they're going to make it through. Then there's playing to win, which is chasing something at the expense of today. Either way, neither one of them are present. One's only focused on the past. The other one's only focused on the future. Neither of them have the joy and fulfillment right now. And so my argument is, what if you create a game worth winning? What if you set and design a vision that's so compelling that you wouldn't want to retire from it? Then you've actually won. And the win becomes the work that you do, not just the outcomes that you get. You know, like I once heard an interview with Kobe Bryant where, you know, he had won 5 championships, but he said he had a work ethic because he loved it, because he loved the work, and that the win was in the work. And so, yes, those were outcomes, but that he enjoyed it. It was like, there's other people that go, I'll be happy when I win the championship, and then they win, then what? And you said something early on, their future isn't brighter than their past, and they become depressed. So when we create a vision that's a lifetime vision, like even when I wrote Money Unmasked, I'm like, I want to dedicate the next 2 decades to making this the biggest, most impactful financial book of all time. And that gives me 20 years of framework of working into it and being on podcasts like this and sharing it and living it and expressing it. And when I did Killing Sacred Cows, I wanted to be a New York Times bestseller. Why? Because that was about me. I wanted to feel validated, and sure, it was motivating. But once I hit it, I kind of lost steam. I don't care whether this hits New York Times or not. I care whether this reaches people's hearts and whether it impacts their minds, and whether, like, I had someone read it, and it was at my cabin on Saturday. They gave me a big hug. They said, your words are mattering to my family. It's making a difference of how I see the world. Thank you. Like, that's connection. And I love the fact that I can write words and it turns into a cabin that I live in, or don't live in, but go up to, or that it turns into a relationship I have with a human being. And like, that's what we don't realize is when we're indoctrinated by society of what they think we should do, what they think will make us happy, we give up who we are and what would fulfill us to appease someone who doesn't even have our best interest at heart. It's like Napoleon Bonaparte said his life changed the day he found out people would die for a blue ribbon. So he offered this blue ribbon, this trophy that people chased, and he didn't have their best interest at heart. He just wanted to win at all costs. So when we're playing someone else's game that's not ours, we lose. And you know well, as I do, the financial game is rigged out of our favor. It's rigged against us. When people say high risk equals high return, they want you to take the risk while they get the return. When people say it takes money to make money, it doesn't take their money, it takes your money. When people say the long haul, they're making money on you through that whole long haul. We know that that's the case. The wealthiest understand that that's the case. But the average person that says they don't have the time, money, or ability, they just hand their money over to salespeople and hope for the best and find out in the end, it didn't end up the way they want it to be. So I even wrote a comedy special called The American Ream, using all of my financial knowledge and making it funny. And it's like everybody's being sold a dream, it's actually a ream. And, you know, I talk about everything from Wall Street to crypto to insurance, mainly property and casualty, to taxes, and like tell jokes around that because I want to reach the people that right now don't think that they can face their finances. You know, we already know the wealthy are playing by a different set of rules, and you're here to bring those rules to the rest of the world, as am I, because it's really frustrating and unfair to think this is someone's human life that we're dealing with. It's someone's human capital. It's someone's dreams, their daily experiences. The number one reason listed for divorce is money, but it's not actually money. It's when people don't have their money handled, they stop dreaming, they stop thinking about the future, and they just fight over what they have. And so we've got to get it where people can dream again and feel safe enough to be excited, to feel safe enough to feel like it's possible. But if they're behind, they have too much consumer debt, they've lost too much money in the stock market, they've done some crazy, syndication they didn't know anything about, and like when people lose, they lose their life, they lose their joy, they leave bitter, and they stop trusting humanity. And that's something that we've got to help with, because that's a really dark, drab place.
Yeah, what do you think, Garrett, is at the core of this? 98% of the people just really, they don't understand even the fact that they are getting reamed at multiple levels. Why do you think that is?
We're taught to be victims instead of be responsible. We're taught it's not your fault. You did the best you could. You don't have the time, and we're just indoctrinated from the time we start that this is just how it goes, and you just got to accept it. There's $22 trillion in mutual funds. Mutual funds were made so that it was easy and thoughtless. You didn't have to have a specific amount to buy a share. You could put money in every single month. You could set it and forget it. You can invest early, often, and always. And who's making the most? Who are the mutual fund millionaires? And the mutual fund billionaires are the people that created them, not the people investing in them, you know? And so that lie that we're not capable and that we should just trust people who are better at passing tests than us. Look, let's say someone goes to an Ivy League school. They're going to be very intelligent in how to pass a test. But are they really intelligent in the emotional intelligence and compassion for the person that's about to allocate their money? Or are they really good at telling a story of why they should be the ones managing it, or their firm should be the one managing it, or why they should be in charge? And how many of those people from the Ivy League school after 20 years have beat the index after fees? So yeah, they're really good at telling a story. The problem is that story doesn't help us out. That story, like, Dave, tell me any Wall Street movie that's inspiring. I mean, every Wall Street movie is about people being taken.
It's true.
Right? Yet people just do it because it's complicated. It was designed to be complicated so people don't question it or think about it. And it was designed to say, well, this person, they graduated from this school, so they must be smart. But that doesn't mean that they're good at managing your life or your money. Just because they could beat you in any test that's in their category. Fine. That doesn't mean, like, and that's the thing, that's kind of communism to a degree, isn't it? You know better for my life, so you tell me what it is. You promise me I'm going to have housing, but then anyone that's been to a communistic place, I've been to North Vietnam. I mean, you see the impacts of communism. You know, I did talk to people that have been to Cuba. You see the effects. Yeah, free housing that you have to share with 100 people because there's not enough people to build it, because there's no incentive for someone to live their life and add value. It was under the guise of you have to because you owe this to someone else. And unfortunately, that's how we've started to treat our money, communistically. Here, I just hand my money over. They promise it's going to be better in the future. And we get there like, by the way, they weren't capable of making it better in the future. And you gave up who you were for a false promise. I know that's kind of hardcore, but that's what it is.
Yeah. Yeah, no, they're forgetting so many different things. They're not educating people on taxes, fees, and inflation. I mean, you know,
right.
you name it. Give us, Garrett, a couple of, you know, in the interest of time here, maybe just a couple of your top, you know, money myths that you want to share. I think we talked about a couple of them, but if there's top two you want to unpack.
You nailed it to start this. Scarcity is the biggest myth, right? But if we're talking about money, there's really three that I think go hand in hand and that most people buy into, because it's all this notion of set it and forget it one day, someday, which is we believe that wealth is a function of how much money we could put away, right? It takes money to make money. It doesn't take money to make money. It takes relationships and value. It takes exchange and service. It takes being resourceful. Money is a byproduct of value. Sure, you can make money on your money, but you don't have to have money to make money. Number two, is the second faulty belief is high risk equals high return. Like, what drunken Wall Street idiot came up with that? Risk means chance of losing. How does increasing your chance of losing help you win? Instead, I believe in investor DNA, mitigating risk and having a team that helps you manage that risk. And the more aligned your investment is with you, because risk isn't in the investment, it's in you, the investor. So if you're making investments in things you know nothing about, that's taking risk. And then the third one is you're in it for the long haul. That's always about compound interest. After 30 years, you're finally going to have all this money. But the problem is, what happens the first 10 years? And what happens when life is interrupted, or you don't have your protection in place, or the market doesn't cooperate, or it was more fees than you thought? Like, there's just too much that people get lulled to sleep in the long haul. So people believe wealth is a function of money times rate times time. So high risk equals high return is the second one. It takes money to make money is the first one, and your long haul is the third one. My belief is it's all about velocity. It's all about cash flow. It's all about investing in yourself. It's all about increasing your skill sets so that you can serve more people, and then keep more of what you make with that efficiency. And then when you're in cash flow and you're economically independent using the frameworks I shared, you're going to be a whole lot wealthier than putting your money away for 30 years in a retirement plan that's going to underperform. I mean, finally, interest rates are doing better now for retirees, But retirees for the last 20 years before 2022 were in trouble because the interest rates were so low. Now they're in trouble because inflation's so high. And next they'll probably be in trouble because taxes will go up, and they weren't trained in that. I mean, how insane is it to say, hey, you're going to one day stop working, and then you're going to create cash flow from your assets. But what I want you to do is never create any cash flow for the next 30 years on your assets. And then when you finally stop working, then you learn how to make cash flow from your assets. It's like, why not do that over the 30 years? It's crazy to me.
No, I know, Garrett, that one just kills me. It's like, we spend our entire career, 40 years, like building this golden goose, right, on this accumulation theory. And then you start to kill your golden goose at 65, and you have this whole fear. I mean, I can't imagine being at the point of saying, are we going to outlive our money? Or,
scary, right?
It would be scary, right, for a lot of people. Or
you better not buy that cold plunge. You better just start eating high fructose corn syrup.
I mean, that accumulation theory to me just makes absolutely no sense. And I think a lot of people they're not asking questions. They're not being curious enough. And, sadly, it becomes too late, right? You become late in the game and you haven't been able to figure that out. So, so many great points, Garrett. Just really spot on. I think this is going to really help people kind of think through some of these things. If you could give just one piece of advice to listeners about how they could accelerate their wealth journey, what would it be?
I'm going to be the most self-serving guest in history and just say, just buy my
Read
shit.
Your book.
Yeah, buy this right here. Okay, that's self-serving. But whether it's this book or something else, you've got to get a framework that gets beyond scarcity and that's empowering versus abdicating responsibility. So the number one thing you do is take responsibility. That's the bottom line. No one's coming to save you. You've got to take responsibility. But if you do, then you can build the right people around you because they'll understand that type of person. So, yeah.
Awesome. Love it, man. So many great points, Garrett. Really appreciate you coming on the show, and I look forward to the next chat.
Hey, Dave, I really appreciate it. This was fun, and look forward to talking with you again for sure.
Thanks. And if people would like to reach out outside of the book, any places, it's the best links to connect you with?
Yeah, moneyunmasked.com is where you can get the book. But if you go to garrettgunderson.com, you can click on musings, and there's my blog. Someone said they read all of them, but they're long. They are long. I write a lot, but I respond to all comments on that. Or if they go to my YouTube channel, which is youtube.com/Garrett Gunderson TV, I respond to all comments that I can make sense of. Some comments I don't know what they're talking about, and some are just viciously mean to me, and those I actually really enjoy, and I do respond in the most snarky, smart-ass ways possible. But I do respond to my blog and to my YouTube channel personally.
Perfect. And can we pick up the bits that you have? Any of your comedy work?
Okay,
so on YouTube?
yeah. If they buy Money Unmasked, we're giving them the comedy special that I filmed as one of the bonuses. We're also giving them the Money Persona quiz and an entire guide and audio on what their money persona is and how to utilize it to navigate things. So that's the best way. I do think that there's this one 10-minute clip. If you go to Ripwater, RIPWATER, ripwater.com/comedy. That will give you a little 10-minute bit if you don't want to buy my book, so that I'm not just always saying buy my stuff. So there you go.
Awesome. No, some great value here, and we'll make sure to link all of that in the show notes for listeners out there. Thanks again for tuning in to everyone. If you're enjoying the show, please follow and subscribe to the show, and talk to you next week.